Hello friends, welcome to Trading Options. My name is Sachin Dharmkar, and in today's video we are going to see the 7 qualities of a successful trader. Let's see what these qualities are. A lot of people make losses only because they are not following these qualities. These qualities are very important, so I request you to please go through this entire video by heart. Read the description, because in the description I'll mention the 7 qualities. I'll list them down, and you have to follow the money management. You have to take the proper position size. We'll go over it. Let's see what is the first quality. First quality is money management. When we are trading, we'll make either profits or losses. If you are making profits, it's well and good. That's how we need to trade. But if you are making losses, then we have to define our risk. We cannot risk our entire capital. Let's say if we have a capital of 1 lakh rupees and we have defined a risk of 2% or 3%, then our maximum risk has to be 3,000 rupees. Anything beyond 3,000 loss, we have to stop trading and we should not trade that day. That is called as money management, and every successful trader follows money management. We are defining the risk. That is money management. Let's look at the second quality. It's position sizing. Position sizing is yet a very important point. Even the experienced traders will have problems with this. Let's look at this example. A stock is bought 100 quantity and 1000 quantity. These are the two scenarios, and the buying price is 50 rupees. If the stock goes down by 4 rupees, in the first scenario the loss is 400 rupees, whereas in the second scenario the loss is 4000 rupees. So this is only because of the position size. If the position size is not correct, then we can end up making huge losses. So that's the reason we have to make sure the position size is properly done. So let's look at what is the third point in these 7 qualities. Exit when the stop loss hits. We have to make sure, this is very important, that if the stop loss hits, we have to exit. A lot of people, they don't exit. They rather average the positions. If the stop loss hits, they add further quantity, and then they keep adding and they keep averaging the positions, which is absolutely wrong. If the stop loss hits, make sure you exit the position. No matter what, we have to exit the position. Stop loss hits, exit the position. That's how we need to trade. Trade like robo. Stop loss hits, exit the position. This is very important again. Point is, we have to trail our stop loss, meaning, let's say if we are in a trade and we are in a profit of 1 lakh rupees, we have to block some percentage of profits. If we are in a profit of 1 lakh rupees, at least let's block 50,000 from the profit, so that if the market goes in the reverse direction, then at least our 50% of profit is booked. First, we need to plan to save our capital, and then the second point is to save our profits. Save the capital, save the profits. And saving the profits is possible only by trailing the stop loss. We have to keep trailing the stop loss. I request you to subscribe to my channel and hit the like button. We are going to have a very detailed discussion on each of these qualities in the coming videos, where I'll make you understand how important it is to follow all these qualities and how you can be successful. Let's look at the point number 5. Do not overtrade. This is a problem with many newcomers. They pick one script and they frequently buy, sell, sell, buy on the same script. Their view on the script keeps changing. First they will be on a buying side, then they will be on selling side. Professional traders take entries when there is a proper level. They trade less, but they trade with confidence. In fact, many traders, big players, they trade only on Thursdays, because Thursday will be a weekly expiry. They come with a big capital, make a very handsome profit and leave. So that's the way we need to learn to trade. We have to trade less and trade with confidence, and make sure our entry point is proper. A lot of us have an issue that they don't wait until the correct entry point. They immediately jump onto the trade. That is not the right way. Wait for the right entry point and then get into the trade. Trade less. Do not overtrade. Point number 6. Point number 6 says plan a proper risk reward ratio. When we are taking any trades, we have to make sure the risk and reward ratio is properly met. The ideal risk reward ratio has to be always 1:2 or more than 1:2. So when you are taking any trades, plan your trades in such a way that the risk and reward ratio is more than 1:2 or at least above 1:1. And if you see that there is a proper risk reward ratio, then only take an entry. Finally, this is yet another important point, that we assume, we have predetermined mindset that the stock is going to fall because of COVID, the market is going to crash because of bad result, the stock is going to fall. No, let the chart tell you the same thing. If the stock is falling, you can clearly see that on the chart. Read the chart properly. You will clearly see that the stop loss is hit, but still you will hold on to the trade. Why? Because you are having this predetermined mindset that the stock has to fall. No, why the stock won't fall? Look at what the chart says. Then either you stay onto the trade or exit the position. But a lot of people assume that no, it has to fall. It has to fall. That shouldn't be the case. Trade like a robo. Trade like a robo. Trade like a machine. Define each of these: target, stop loss, entry. And if the stop loss hits, exit. If the target hits, you can trail the stop loss or you can exit. But stop loss, we have to exit. Do not assume, because just because of our assumption, the market will be going against us. You will see that the trade is completely against us, but still you have that predetermined mindset that the stock has to fall, and finally the stock won't fall. So do not assume, trade as to what you see. That's all I have. I hope this video is useful. Thank you so much for watching. Have a good day.